Majority of the people see copy trading as an easy passive income strategy during the bear market. Today, we are going to discuss why copy trading may not be such a great option when it comes to earning money and what are things about copy trading that the majority of the people don't realize. Stay tuned to rethink your crypto game. Hello everyone, my name is Željko and welcome to Crypto Grid. So I talked about investing in small caps and copying signals from other Telegram and Discord groups, and today we are going to discuss the issues with copy trading. After the FTX exchange collapsed, trading volume decreased drastically pretty much on all centralized exchanges, and that pretty much led to decreased profits for the exchanges as well. So they had to find a way to make profits, and that's one of the biggest reasons why they invented and why they are promoting copy trading, because the amount of funds that are traded on their platforms is directly proportional to the amount of money that they are making. So more people and money traded means more money for the exchanges as well. One of the easiest way to achieve that was to add copy trading to their platforms. So what is copy trading actually? Now when you open majority of the top exchanges like Bybit, BitGet, OKX and many others, you have a copy trading section where you can see a list of master traders with their trading history, performance over the last 7, 30 days and maybe even longer, draw down on their portfolio and the amount of money with which they trade. From that list, you can pick one or multiple traders for which you think that they will achieve the best results and increase your portfolio the most. Once you pick your master traders, usually you can adjust parameters such as funding amount, leverage, and if you want you can create stop-loss orders that could exit the trades before they do actually. So pretty much once you copy them, you will copy all the actions that they are doing. So if they create a trade, the trade will be created on your account as well. If they close it, yours will be closed as well. So what are the issues with copy trading? The worst thing about copy trading is that it works in a way that the master traders are taking a percentage of each winning trade and not a percentage of the value for which they manage to increase your portfolio. Usually this percentage is 10% or higher from the winning trades and it doesn't affect losing trades at all. What does this mean? Let's say if you have used $100 for the position size and you get one winning trade of 10% and one losing trade of 10%. If you did that on your personal account once both trades are closed, you would be at $100 again, minus the trading fee which would be like $0.1, maybe in this case with this position sizing. If you had $100 allocated to some master trader, and he gets one winning trade of 10% and one losing trade of 10% as in the previous scenario, he would take 10% of the winning trade, which is $1, and the losing trade would be the same as if you have done it. So you would lose 1% of your portfolio. Maybe this doesn't sound like a big deal to you, but if you think about the factor that if you have 10 winning trades of 10%, and 10 losing trades of 10% as well, you would lose 10% of your whole portfolio value, while the master trader actually has the same amount of money on his account from his own trading, plus 10 times 1% that he earned from every person that is copying his trades. So if he has 100 people with $100 position size, with one winning trade of 10%, he would get $100 multiplied by 100 people, multiplied by 0.1 because he's gaining 10% per trade, multiplied again by 0.1 because he's taking 10% of each winning trade. So he pretty much earns $100 for that just one trade. So this means in order for your account to be at zero, if a master trader is charging 10%, he needs to be at 11% profit that your account stays at the initial value. If he is charging 20%, he needs to be at 25% profits in order that your account stays at the initial value. I won't say that this isn't possible, but I'll say that this isn't realistic to do in a long run. If you would start your account with $100 and you're able to gain 25% monthly, you would be at like $1,455 in the end of the year, or $21,176 after 2 years. So these are insane returns. Another issue is if you look at the exchanges copy trading section, you're seeing how everyone is profitable, making ridiculous gains, but when you include filters and when you try to look for people, you realize that the majority of them are actually on the exchange for less than 30 days, and it's very difficult to find master traders with really good results across the periods of a year or longer, for example. The reason for that is that many of them use multiple accounts with different strategies, or they use strategies that will have a super high win rate with many small winning trades, but once the stop loss occurs, it can liquidate them completely. So at the first sight they will seem super profitable, but after some time they will just disappear from the platform. Even if you exclude the risk of holding money on the centralized exchange, you have a risk of letting someone else to manage your funds. These master traders could just forget about their positions, or something would happen to them that would prevent them from managing the positions accordingly. Another risk is if they are not that good and if their performance is getting worse, that would affect your portfolio in a negative way, obviously. So giving full permission to someone else is always a huge risk. If you try to edit leverage, stop losses and other parameters on your end, it might go against the initial strategy and principles that the trader is applying, so you're pretty much never on the winning side. To be able to make proper changes, you need to know what the master trader is doing, and with copy trading that won't happen, so you're always in disadvantageous position if you need to manage their trades. Also, after some time, if more and more people are copying this trader, with a larger portfolio size, he will pretty much act as a whale in the market, which means that you might get larger spreads and worse execution prices, which again isn't a big deal on a single trade, but when it accumulates over time, it makes a significant difference. Also, once that large liquidity at a certain price is taken at your order value, the price might just push through, and that would put you in a bad position immediately and increase the odds of reaching a stop loss, especially if a master trader is using tight stop losses. This could easily convert a profitable strategy for a single retail investor to unprofitable one for a group. The good thing about copy trading is the same as for copying signals. This allows you to learn, and you can see from the first hand the exact returns that master traders are getting using the particular strategy. Seeing which assets they use, do they look for breakouts or they trade in ranging markets, what are the times when they enter and exit the markets, and all these things can help you to tailor your own strategy, but that's it. You should always have strict rules about what exactly you're doing in each specific scenario, and you can't do that if you're copying others. So again, you should learn the basics of technical analysis, be able to identify trends, and understand what's happening in general and if you're already invested in crypto markets. And trust me, nobody will make you the money, you're the one that needs to do it. You need to take responsibility for your trades, for your actions, and you will thank yourself later on. I always advise people to start with spot investing and spot trading with main assets like Bitcoin and Ethereum, since looking historically, if you just buy today at one moment, you will be able to take profits even if you have 50% plus unrealized loss at one moment. It's easy and simple, and probably the best thing to do, especially if you're still in an exploration phase. When you're doing futures with higher leverage, you need to be way more careful, and you need to be really good either when it comes to entries or when you're exiting your positions. So thank you for watching, I hope that you liked the video. Please consider joining my Telegram group and free Zoom calls every second Thursday, where you can ask pretty much any questions that you want. Thank you for staying until the end. Please write anything in the comments below to show your support, and if you want to see even higher quality videos, which would be even more frequent on CryptoGrid channel. Stay strong and healthy. Bye.